One of the topics in precious metals that your organization is also known for, you recently have just raised another tranche with Sprott Silver Trust. Your company, and especially its founder, Eric, is probably one of the most bullish people I know on the silver space. Do you feel the same way, Charles, about silver equities?
I feel the same way about silver, and I feel the same way about silver equities. In terms of silver and the arguments being out there, and it's reasonably well known, although I think a lot of people still don't know it. I mean, if you go back over the last 2,000 years, for about 95% of that time, the gold-silver ratio was roughly, 12 to 16 ounces of silver would equate to 1 ounce of gold. And there are economic reasons for this. One of the first ones is that if you look at the ratio of gold to silver in the ground, it's at a rate of around 16 ounces of silver for every ounce of gold. So back in the olden days, we'll call them, if a miner was looking at mining a ton of gold and 1 ton had 16 ounces of silver and 1 ton had 1 ounce of gold, then the miner would decide to mine either one of them, would not care which one he mined, because they would both equate to the same economic return. If you go back to 1834 in the United States of America, at that point in time, the Coinage Act of 1834 actually mandated that the gold-silver ratio was 16 to 1. So if you had $1 of fiat currency, you could get it at a ratio of 16 to 1 in either gold or silver. Now, today we're currently in a situation where that ratio is now about 50 to 1. And one of the reasons I think that has happened over the last 100 years is because the central banks got off the silver standard. And so all the central banks around the world sold their silver reserves, which in effect actually depressed the silver price. And ultimately, we believe that this ratio is going to go back towards 16 to 1, much closer than it is today, and that silver will actually outperform during that process. In terms of silver stocks, they will be the net beneficiaries of increasing earnings and cash flow because of the higher price. And, the other thing that I think is also important to look at is the valuations. And a decade ago, silver stocks used to trade at a premium to gold stocks. But if you look at the valuations today, there are a lot of the big major silver producers that are trading at single-digit or low double-digit PE ratios. Case of Pan American, it's trading at about a 9-10 times PE. And here's a company that can internally fund a doubling of its production from about 25 million ounces to north of 50 million ounces over the next 5 years. So I think the valuations are exceptional out there, and again, I'm very bullish on where I think the silver price is going.
The other thing about silver, it is a lot more rare than gold, but also in the silver space, if you look at gold mining equities, there are a lot to choose from. I remember hearing your chairman speak at a Casey Research conference, and somebody asked Eric in terms of why they came out with the silver trust versus silver equities, and he said basically we had to raise a large amount of capital. I don't know if I could find a bunch of high-quality silver companies. In other words, there's not enough of these companies around.
No.
Do you still feel that way?
No, absolutely. There is a shortage of companies. As I said, a decade ago, silver companies used to trade at a premium. And I always wondered why that was. And, my basic belief was because there is such a shortage of silver companies. And that still is very much the case today. We haven't seen a huge proliferation of new silver companies out there with any meaningful production. And, I don't think you're going to see anything significant going forward.
Charles, as a fund manager, we talked about earlier, there's been sort of these 5 periods of time over the last, let's say, 12 years where the stocks have underperformed the bullion. As a fund manager, how do you keep your spirits up at a time when, people are saying, gosh, gold is up 10% or it's up, but the stocks are down? As a fund manager, how do you keep your bullishness?
I think one of the things as a fund manager, you try and get rid of your emotions and avoid them in your decisions. The way I look at the world today is, you know what, I'm in this for the long term. My long-term view is that the gold and silver prices are going much higher, that the Europeans and the U.S. and other central banks are going to continue to print, and I don't see that changing in the near future whatsoever. The other thing which I would say, and this is more pertinent to today, is 2011 was a period where stocks underperformed, very much like they underperformed in 2008. And one of the things I remember is after 2008 came 2009, and we had a spectacular year in 2009, and then we had a spectacular year in 2010. So right now, I'm very optimistic on gold and silver stocks. Think they'll do very well. You know, certainly there are risks out there, and we always get surprised by how things turn out. But right now I am actually as bullish as I've been in quite some time.
A final question, Charles. What do you feel distinguishes Sprott Gold and Precious Metals Fund from, let's say, other funds in the space? What do you believe is your edge?
You know, there's a number of things. If you look at the Sprott Fund, it's a combination of large, small, and medium cap stocks. And it's a process that I've been using for the last decade. And, you know, over the last decade, we've had great performance, and a lot of that performance has been from the alpha that's been generated by the small and mid-cap stocks. Over the long term, they will provide better risk-adjusted performance. However, having said that, there are certain periods where you want to have some large caps in there, and they give me the flexibility and the liquidity in the market to change my characteristics of the fund should I deem that I want to change them. And a good example would have been a couple of years ago, I had single-digit holdings in silver. And I said, you know what, this silver story is a very good one. It makes an awful lot of sense. And I wanted to increase my weighting. Currently it's around 20% today, which I think is probably one of the highest levels of any precious metals funds in terms of silver stocks. And that large cap sort of gave me the ability to sort of change that quite well. So I think it's a good, well-balanced fund that sort of captures all different segments. And the other thing is on those different segments is each year it seems like there's a different segment of the market that does better. And you know, if you go back to 2009, the mid-caps were the best performers. 2010, small caps were the best performers. In 2011, it was bullion, and on a relative basis, the large caps did better than the small and mid-caps. So it's nice to have a blend of all of those. And I think this year, and, you know, we'll see what happens, but I'm wondering if the cycle will repeat itself again, and we could have the mid-caps leading the charge.
Final question, a word of advice for individual investors. I asked you how you handle volatility, how you handle periods of time where we go through these long consolidation periods. What would your advice be to individual investors?
I think, you know, volatility does exist if you want to be involved in the gold space, and I think everybody should be because of the debasement of currencies that's going on. What you have to do is try and set those long-term objectives. And sometimes you just have to be patient and wait because it's not going to be one way. And the other thing is don't give up. If the long-term story is still intact, stay the course, hold the course, don't give up because you may be surprised one day and suddenly the market takes off. And, you know, just as an aside on that, you know, if you go back to the period 1979 to 1980, we saw a sort of roughly fourfold increase in the gold price in a year and a half. So you never know exactly how these things will sort of move and when they'll move. So, again, hold to your long-term thesis.
All right. We've been speaking with Charles Oliver. He's Senior Portfolio Manager and Co-Manager of the Sprott Gold and Precious Minerals Fund. If you'd like to find out more about the work that Charles does and the money he manages, you can do so by going to the website Sprott.com. That's SPROTT.com. Charles, thanks for joining us on the program.
Thanks very much.
You can subscribe to Financial Sense NewsHour in the iTunes and BlackBerry podcast libraries, or at feeds.feedburner.com/FSN. Find more information about our guests at www.financialsense.com/newshour. Friend us at www.facebook.com/financialsenseonline. For our on-the-go listeners, you can access Financial Sense on your mobile device at m.financialsense.com. The Financial Sense News Hour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the News Hour each involve their own unique risk factors, which are not discussed on the show. Responses to listener inquiries are based on the personal opinions of James Poplava and do not take into account listeners' suitability, objectives, or risk tolerance. Financial Sense News Hour and its parent company shall not be liable for any financial losses that result from investing in any company